Today, I'm going to talk about a tariff strategy that was up 105% in April alone during the entire Trump tariff turmoil. Say that 3 times fast. I'm going to show you what went into the strategy, what it's doing. There are no indicators, and in fact, it's going to be a very controversial episode because I'm calling for the death of traditional technical indicators. It's over, my friend. And I'm going to just go ahead and show you 2 papers right away just to prove what I'm saying, and we're going to really dive into that. But I'm just warning you, you're not going to like what I have to hear. Okay, so here's a paper that talks about 2,127 technical trading rules. And at the end of the day, what the sum is that profitability becomes much weaker in the more recent period, suggesting this was in Forex, but the market becomes more efficient over time. I've actually got a different thought process on that as I kill a mosquito. Die. All right. See, that today's episode is all about death. Let's go to another one over here. See, I'm working on a tightrope, man. We're doing this in real time. No messing around with edits. So here's another paper. They went ahead and used minute level on SPY. They assessed 13 models. They went through indicators such as Bollinger Bands, exponential moving average, Fibonacci replacements, retracements. And it said that there were some risk-adjusted performance metrics that improved, but overall, they struggled with out-of-sample generalization, highlighting significant overfitting challenges. Why isn't it working anymore? And I contend that machine learning and AI tools went into the markets and have mined them dry. So traditional price indicators, everything is price. So it's either a momentum or a mean reversion like Bollinger Bands or RSI. They all do the same damn thing. And they have been mined dry. So, if you think about it, like, why did I spend $6.2 million building AI trading tools, supercomputer network? We use really weird data, and then I put a whole lot of money into machine learning to basically find needles in a haystack, like weird correlations, and just anything but traditional trading indicators. And think about this too, like, why would I spend all that money when you can get free trading software? You can go to TradingView, you can go to Ninja, TradeStation, all that. Well, there's a damn good reason, because at the end of the day, I saw this one coming from a mile away. And so let's go ahead and talk about what replaces this, the old tech. So on one hand over here, we have the old tech. This is a trading strategy that I built with Portfolio Boss that's going to use traditional trading indicators. Not so great. And I'm using the exact same symbols. And on this hand over here is the new strategy. So which one do you like better? So let's go ahead and discuss that real quick. And while I pull up Portfolio Boss, it was kind of interesting that I've just been talking to a lot of retirees here. Most are just woefully underfunded when it comes to retirement. And unfortunately, that includes my dad. So we're going to get him on a plan as well. And, we were talking about my uncle. He basically died on his tractor. And so he was thinking the same thing was going to happen to him. So we're going to go do a speed retirement for him. We'll see how that works out. But a lot of people, I'm sure, are in the exact same boat over here. So let's see if I can help you out as well. And don't forget this too. A lot of people are like, well, I can always go back to work after retiring or whatever. I doubt it. I think that robots are even going to take over Walmart greeter jobs. So good luck with that. I think the one job that's going to stay around is you got to build your nest egg really quick. And yeah, trading is where it's at. And yes, you just have to use really weird data. So let's cover that right now. So I think I can help you out over here. So first of all, what the heck is this trading strategy trading? I mean, how do you get these kind of returns? And remember, this is a back test, but we're seeing, and this is made by one of our members, and he just did a terrific job of building this strategy. We'll cover that real quick, but look at this. So for the past 2 years, this strategy was actually built by him in early 2023. He followed my advice and was keeping it really simple. And this thing has just rocketed to the moon. So not only does it work during these crazy tariff times, it works in up markets, down markets, sideways. It's done very well so far for him. And I got to give props to my main man here, Carlos, for building this because it was the highest grossing strategy that I've seen so far in 2025. So congrats to him. What's it trading let's cover that real quick. It's actually trading the 3 times leveraged financials. So FAS is the ETF ticker and FAZ for the inverse. So it switches back and forth between the bull fund and the bear fund over there. Let's go. We'll talk about actually what it's saying right now as I record this. So let's just save that for a moment. We'll put a pin in it, right? And how was this strategy built? So what we do is our main edge is using ETF mispricing. So every single day ETFs are mispriced, and there's a certain pattern that we look for that only the machine learning is going to find. So like I said, it's kind of like a needle in a haystack. So we use this really weird data, and then the machine learning is going to pour over it and look for fingerprints, so to speak, that are predictive of where this fund goes next. How was it built? Well, let's really quickly fly through what fitness functions are. So what he did to build the strategy, and by the way, this can be done with a template really easily to where you can literally just hit the start button. And then the machine learning network, it's over 3,500 CPUs, whirs to life and starts building a strategy for you. There's no coding. You don't have to go in and learn any of the easy language. I don't know what they call that, by the way. It takes about 100 hours to learn how to program and then actually start building trading strategies. Ninja's the same way. TradingView with their, what is it called? Pine code, something like that. So you're going to spend about 100 hours doing that. So why not just let the tools do the work? We're in the age of AI. So what he's shooting for is looking for at least 100% annual return. And that's weighted pretty high. He doesn't want to have more than a 20% max drawdown. And he's looking for at least 3% per trade. So you're not giving all your money back to your broker. About 3% profit factor, so that's really the ratio of gain to pain. Higher is better. And then what happens is, this is really counterintuitive, a lot of people don't know this, is that you need to keep the amount of rules extremely small. This strategy only has 2 rules. There's a buy rule and a sell rule. That's it. So 2 rules. And the way you do that is just maximizing the number of trades per rule. So we want to really squeeze that down and get the strategy just to find the bare essence. People using 20 trading rules, you're overfitting, man. You're going to lose money in the hardest place to make money, which is after you build your trading strategy and you put real money into it. And then cybercode is basically the strategy is built using C code, the computer programs itself. That used to sound a lot more interesting when we built this 5 years ago, but since then you have AI that can program code. So far it kind of sucks. Maybe you can make a real simple Frogger game or something like that. I'm sure it's going to get a lot better, but this is specialized. So it looks through all this crazy data that we feed it that's not price data, like all these price indicators that are woefully no longer working and mine dried. And so then it builds this trading strategy itself. And so we want to go ahead and make sure there's at least 100 trades per line of code. And I can tell you, I'm not going to show all the code in here, but it looks a lot like this. One single line of code. This is really weird, isn't it? There's not even a parameter in here, an option to, let's say like a 100-day moving average. We're just looking at greater than, less than. Yeah, this is really strange stuff. And by the way, you know, good old Earl Nightingale, he used to say that you can go into any industry, look at what the majority are doing, and do the opposite. So no wonder why you're not making money. There's all this free software out there. Yeah, it's mine dry, man. Millions of people have access to free stuff. You can bet that that's not what you need to be doing to make real money there. So let's go ahead and we'll talk about what you do next after you set up all these fitness functions. You hit start. Again, you're not programming your fingers off whatsoever. And as you can see, it's every month was profitable up until just now, so it started having a little bit negative, but we're only 1 week into May as I record this. Let's go. I promised you that I would tell you exactly what it's positioned in now, and we'll look at some trades just a second because we want to actually see what the trades look like. So we have symbol FAS, and you can see how it was trading in here. It was a really nice trades. You can see where it bought over here, sold, and then got out, bought and sold again, another nice little gain. And then you can see that during this entire tariff decline, it stopped. And remember, this strategy is over 2 years old. How in the world did it buy at the very bottom down here? But that's what it did. And then it went ahead and sold. But here's actually where it gets really interesting. So these are nice trades. These are great. These are, it's like 2%, 9%. What was this one over here? Just a small little gain over here. And then this one, let's look at it again, like 20%. Yeah, but you know where the big money was made? In the inverse. So let's take a look at that real quick. Look at this. It's managed to sell. It bought at the very top of the financials here into the inverse fund, and then cashed out on the freaking day of the bottom in financials and the markets for a 70% return. So this makes money as the markets go down, and its timing was impeccable. Again, we're doing something that other people are not doing. We're using really weird data, and people have been saying, rightfully so, that big data is the new oil. But you just have to figure out how to extract the oil from all this data, and that's where the machine learning comes in. There's no way a human could do this whatsoever. So while most people are stuck using old tools, this is what I put a fortune into, a good deal of my savings, that's for damn sure. Okay, as promised, let's look and see what it's still in and is holding FAZ. It's been in there for a little bit right here. I think a lot of people right now are starting to come around to what I've been thinking, is that we have hit a bottom and the markets are going to go up, but it's probably going to go up in stair-step fashion. So we'll see if this makes money as financials actually decline over the next week. We'll see. I hope that encouraged you. Go ahead, if you want to get into my world, by the way, you want to understand this weird data, the crazy machine learning tools that we're using, go ahead and look underneath this video. There's a link in the comments, and there's a cheat sheet waiting for you. Welcome to my world. We'll see you next time.